Hey guys, Kyle here with a quick market update. There's a lot of interesting stuff happening in the charts right now. So just want to give you a brief overview of what I'm seeing and then what we could potentially be seeing in the future and specific levels that I want to be trading off. And, there is a really strong weekly setup at the moment. So we want to see how that plays out. And I'm just going to let you know all the positions that I'm taking right now. One thing that's really important to note right now is that we do have FOMC on, well, Wednesday morning, Wednesday in the US. And that has a lot of potential to swing the market in a new direction. And especially when the market's been selling off really aggressively, Jerome Powell usually comes out and just gives a little bit of guidance and massages the market in, the opposite direction. So if it's been pumping really aggressively, he'll come out and be a bit more bearish, so it brings the market back down. If it's been dumping really aggressively, like we have been, it's been pretty much straight down since, pretty much for an entire month, since about the 19th, 18th of February. He'll come in and he'll say something, nice and sweet for the market to help, sort of bring that up and create some sort of a rally, which is probably what we're going to get. We'll also have a dot plot coming out this month, which only happens every second FOMC, and that can also give guidance of what they're going to do in interest rates for the end of this year and end of next year, and that can also shift the market quite aggressively, which is what we saw happen in December, which sort of the market was really pumping quite aggressively, and they came out with sort of bearish guidance with the dot plot, and that sort of put a top in the market, especially for crypto. So those are the main things to sort of watch for this week. But let's jump into the charts. I'm going to show you guys exactly what I'm looking at. So at the moment, the main thing that we need to be watching for, yes, is the stock market, because at the moment, the crypto markets are very highly correlated to stocks. And I just wanted to highlight a couple of really key things. We have broken through the 200 daily moving average on the Nasdaq, which is the first time that has happened since the bear market in 2022. Right, we broke out of that in early 2023, and every single time we've come back to the 200 daily moving average, we have bounced off that. This is the first time we've broken through. But as we all know, Trump and co have been working very hard to get the market down so that they can reset the rates, which are too high. So we're going to see if our FOMC plays ball with that. Anyway, the market is very oversold. It's one of the most oversold that we've ever been. The only time I've seen it this oversold was actually during the COVID dump. Right. So, that's the sort of levels that we're seeing at the moment. Right. And it was also this oversold at the start of the COVID dump, which, and we're also still above the 200 daily moving average. So, just that's something to keep in mind as well. It could bounce here easily and then roll over one more time. But that was all going to come down to Trump's policy and everything like that. So the reason why I'm looking at the stock market here is because if we get a nice bounce here and we can come back into the range and even head back all the way to the previous highs, crypto is going to do really well and it's going to bounce quite aggressively. So things to note for, we've come back and we've tagged our blue line through here from last year. So that's the VWAP from last year, and that is the previous year VWAP, right? So the blue line and this gray shaded area, that's actually our technology. It's called the long-term VWAP, and we've coded that in. So it puts all the levels over on your chart, and it just makes it really easy to trade off. And basically these charts, the VWAP indicator and everything like that. This is basically a strategy that Wall Street traders and institutional traders use. And they use it to get either in or out of their positions for their clients. And it sort of gives them a nice average. It's called the volume weighted average profile. And basically, the way that they use that is that, if their client complains, oh, you got me a bad entry, well, we got you in at VWAP or we got you in around VWAP. So, they can't really complain. It sort of hedges the risk for them. And so when we get specific reactions off these key levels, it does help us to make trading decisions, right? So that's what we're looking here for at the moment. A nice bounce. You can see we had a nice double touch of our previous year VWAP, which is always a really strong level. While we're oversold and we're looking for a swing high, we've also got a buy signal on our cipher. A little bit of a nice bullish divergence here on the daily time frame as well, right off our 0.618 Fibonacci retracement from the last push that we've had. So that is like a lot of confluence to see for a bottom. And obviously we've got FOMC in a couple of days as well. So this could easily end up back somewhere around the middle of this range. And then we have to see if this ends up rolling over or not, right? And that's going to be pretty much the tail of the tape for what Bitcoin and crypto does, because we have been very highly correlated. Now, really important to look here on total market cap for crypto. What's going on? We've come back to, right, the same thing as 0.618 Fibonacci retracement. It's almost the exact same setup as what we're getting on the NASDAQ, guys, right? So we come back to 0.618. And then we're also tagging the previous year VWAP. So, right, we can see our blue line through here and that shaded area. So that was the VWAP. We call that the yearly, developing yearly VWAP. This is the value area high and this is the value area low, right? So in the current year, right, that's up here. Okay, so we see the blue line start here. Okay, and we can see that our previous year VWAP through here, right, is come from last year's VWAP. Okay, so we've come down and we're having a really nice, strong reaction to that. And we have the confluence of the 0.618. Now, the thing I really want to show you guys here is the setup that we have on the weekly, right? This is a perfect setup. We see this all the time on crypto. We have a nice consolidation. We have a big breakdown from there, and we tag the previous range high. We put in a pin bar, and then we end up getting a morning star reversal off that, right? So typically, the market will reverse using a Morningstar reversal to break it out of a consolidation, right? It happens all the time, okay? And same when we're in a bear market. Like here's a really good example of it going in the other direction, right? We have a shooting star reversal and the market breaks the downside. So here's another Morningstar reversal, right? There's a Morningstar reversal there. This one was a little bit weird, but we had a pretty strong breakout candle just there. This is the type of Morningstar reversal where you have sort of two candles in the middle. You have a double, we sometimes call this a double doji reversal. But then the key Morningstar reversal for the end of this consolidation was this one here. So we had one here and then one here as well. And then obviously, the breakout was also a Morningstar reversal setup. So you had three in a row for the last consolidation on the weekly time frame, right? You can go back and have a look at these all over the previous history of Bitcoin, but they are very, very consistent that you will have a weekly Morningstar reversal, right? There's this is the other type of reversal that you can get that's not a Morningstar, and this is what we call a bullish engulfing. So pretty much every time there's a reversal on the weekly time frame after consolidation, you either get a bullish engulfing or you get a Morningstar reversal set up on the weekly, right? And we're in the middle of that right now. So we're in the middle candle. What we want to see is on total market cap, this close inside the developing yearly value area low or higher on the weekly time frame. So then we'll just have sideways range here, and we've just pushed really aggressively, reaccumulated up here or distributed up here, and then we have a pullback to retest the previous range high and bouncing off that. So we just have to see how this plays out, right? No one can tell you exactly where a chart is going to go. All trading is you have all your key levels and everything like that mapped down on the chart. And then when price comes back, if you get the right reaction off those key levels, then you take a trade, right? If this rolls over again, there's nothing I can do about that. I'm not, a fortune teller. You can't tell what's going to happen in the future. All you can do is wait for your setups to appear, right? That means you get the right reaction off the levels that you want to see it at, right? And this is exactly the reaction on the weekly time frame that I want to see off the exact levels that I want to see, right? Previous year VWAP and the 0.618 Fibonacci level with a Morningstar reversal setup. Like it doesn't get cleaner than that, guys. I'll show you a couple of examples on the daily time frame on Bitcoin in our previous consolidation through here, right? So on the daily time frame, last year, this was probably one of the best setups that we had. Just let me get up our indicator suite. Okay, so we can see our blue line is like the area of interest that we want to trade off, right? So this is a Morningstar reversal just here off our blue line. So now this line has become, that was our VWAP from 2024. Now that has become the previous year VWAP, right? And that's the level that total market cap is bouncing off, right? So here we've got our daily Morningstar reversal, right? So the way that I throw a trade on there, it looks like this, okay? And then we're looking for the market to rally. And obviously that was one of the best trades I had for the entire year. Ended up taking profit somewhere out here, and it was about, a 20-to-1 risk to reward, right? So that means for every 1% I risked on that trade, I increased my account size by 20%. Okay, so like sometimes you get really great trades off here. The other one was off the value area low back here as well. And then obviously you can see we have more of that Morningstar reversal type shape through here. This one wasn't off a key level, but that was kind of something that we were looking for. If you go down to lower time frames, there was like order blocks in here, point of controls and stuff like that off this dump candle, which is always important to see. But the real easy, obvious trade was this one here for this entire consolidation, right? And there's a whole heap more I could go dig deeper into it there. But that's just another example of what you want to see, right? Here is pretty much the exact same setup once again, right? It is a pin bar reversal off our VWAP level, right? And that's pretty much what we're getting now, that exact same setup. We're getting that on the weekly time frame. So I just want to see how this plays out on the weekly time frame and if we can push. So if we do get bullish messaging from, FOMC, let's say they say, that they want to, let's say they bring the dot plot down slightly, which would signal that they're going to lower interest rates more than what they had said previously in December, because we're starting to see a lot of deflation happen in the market right now. Right. If they do give signals to that in the dot plot, and Jerome Powell talks about maybe ending QT, maybe they say they're going to end QT in July or something like that. That would be very bullish for the market. I think we'd see a strong reaction on stocks. I think we would see a strong reaction on in Bitcoin, and the rest of crypto markets will get a really strong recovery here, right? And then we just have to see how the weekly closes. Does this end up rejecting, or do we get a really strong close with something that looks like this, right? If we get a really strong close and this weekly ends up closing more than 50% of the down candle, that's a really strong indication that this is actually a solid bottom that we can build a base off. And then we need to be looking to reclaim the previous range low, right? So the previous range low is this level through here, which is pretty much going from about 92K to 93K. So if we can reclaim that, you can see that we rejected off it twice with a bit of help of the Trump admin dropping some really bearish news for us. Right as we're coming into that level. But if we can reclaim that level, that means that we're looking for much higher targets. And my target would be this macro fib target up here at 137. So that will end up looking something like this. So the first step is we want to get a weekly Morningstar reversal, right? After that, we're looking to reclaim the developing yearly value area low. If we can reclaim that, then the next level we need to reclaim the next level after that we need to reclaim is this level through here, which is our range low. Okay. Then what we can see is how price reacts to the developing yearly VWAP. If we can flip the VWAP, that's a really bullish signal. And we're looking for obviously that to rotate to the developing yearly value area high. So developing yearly means the current year, right? And then after that, what we're looking for is this to flip the value area high. And then after that, we can push to new all-time high. So those are the key levels. There's a lot of different resistance levels in here and levels that the bears can try and hold. But for me, the main one is going to be pretty much this, what is that? 92.5, 93K level. If we can reclaim that, I think the bears are going to be in trouble. And then, the market will have a really big shift and things will start to push to the upside, right? Now, let's say we reject off 92K again, okay? That's obviously going to be bearish. So if we have a really good, weekly and, Jerome Powell comes out, we have like bullish, news and everything like that, and it comes in here and we get this sort of action again, right? That thing that I was telling you about before, that morning star reversal, this was a shooting star reversal. So that's the same setup in the opposite direction. So shooting star reversal, and then that's actually a bullish engulfing one, which is a stronger close to the downside than the up candle. That tells us the market's quite weak, right? It's the same going in the other direction. So we're going to see something like that on the weekly time frame, but to the upside. Now, if we get this sort of action here, right? If we get this sort of action here, but over here again, then that will be a really nice short entry in a great position for us to take a whole heap of profit, maybe sell some spot trades, because this is probably going to roll over. And then we will be looking for a bounce off this final block order boss level, right? Which is pretty much what we've done on total market cap. Right? If we go back and look at here, we've come back to this previous consolidation level, the highs of that, and bouncing off that. The market has been trading a lot more cleanly the last year or two off total market cap, pretty much for this cycle, right? It's actually traded a lot more cleaner off total market cap than what it has on the Bitcoin chart. Like if you look at the actual cycle low, we came down, we perfectly tagged the previous cycle high, right? If you look at the same setup on Bitcoin, if you look at the same setup on Bitcoin, it actually wasn't as clean, right? So I actually believe, right, we came much deeper below that level, right? I actually believe that it's actually cleaner to chart the total market cap chart at the moment than it is to chart Bitcoin. So it's just something to think about, because the market is becoming, there's a lot of market cap is going into other things now, whereas Bitcoin used to be such a heavy weight of the market cap. So those are the main things that I'm looking for, right? Do we end up actually needing to come back down and retest level at 72K? If we do, I think that would be a really strong bid. The other level after that that I think would be an absolutely amazing buy, yes, would be the previous year VWAP on Bitcoin, right? For that to happen, stocks would have to bounce here and then roll over, and we have more bearish news from the Trump admin, and they're trying to push the market down more and more so they can get interest rates lowered, et cetera, et cetera. Right? If they manage to get interest rates to start lowering without having to really destroy the market, then I think, we play out more bullish. So those are the key levels I'm looking for. A reclaim of 92 or 93 means that we're really bullish. I'm looking for pretty much 140K. Excuse me. If we get rejected from 92, then I'm looking for other key levels like rejection from here would be a really great short entry, and then we could trade that all the way back down and look to re-enter at pretty much 72. If that fails to hold, then we're going to try again at 66. Right, so that's pretty much my market map at the moment, and all the key levels I'm looking to take trades off. Like I said before, trading isn't about like predicting where the market's going to go. It's about understanding where your key levels are and knowing the exact reactions you want to see. And when you get those reactions off your key levels, then you execute those trades. So hopefully that helps you understanding of the market, what I'm seeing, and where I'm predicting. Well, I shouldn't say predicting, but where I'm thinking the market could go. So my overall thesis is most likely Powell is going to come out and be bullish, and we're going to end up reclaiming this 92K level and push the upside. But, I'm a Bitcoin bull at heart, so I'm always more expecting to the upside, but I will trade very aggressively to the downside if we reject from this level. I do get that setup that I want to see here, which would be that shooting star reversal into the range low here, and then I will be looking for a rollover and reloading to the downside, which is totally fine as well, because, okay, maybe we don't make as many dollars doing that, but when we get to stack our coins, I'll end up with way more Solana, I'll end up with way more Bitcoin for when this does eventually rally to the upside. I'll take a few shorts in there as well so I can actually profit a little bit. Then I'll rotate that profit out of the USDT and I'll buy more Bitcoin with it. And then that means I've got more coins. If we do come back to these levels down here, that means when we do eventually push up, when the Trump admin pushes more bullishly, they lower interest rates, they stop to QT, they start stimulating the economy again through government spending, et cetera, et cetera. I'm going to have more money because I have more total coins when this does rally to the upside. So it's about understanding that you can be setting yourself up no matter which way the market goes. Okay, if it goes to the upside, sweet, we make more dollars. If it goes to the downside, sweet, we're going to be stacking and accumulating more coins for when we do have that next swing high, and then we're profiting even more. Thanks a lot for tuning in, guys. We'll see you all in the next episode.